Welcome to the Security on Cloud podcast, brought to you by Anitian, where cloud security and compliance are top of mind. Join the conversation with your hosts, John Vecchi and Scott Emo.
Welcome, everybody. You're listening to the Security on Cloud podcast, live on Anitian Radio. I'm your host, John Vecchi.
And I'm Scott Emo. You know, the security and cloud markets are jam-packed with companies, from large mega brands to small security startups. On a previous podcast, you heard it here first. In Richard's latest yearbook, we're topping over 3,000 known security companies. And as far as we know, that doesn't even include those still in stealth mode.
That's right, Scott. And, like I've always said, this enterprise security space is really unlike any other relative to the sheer numbers of companies all competing for market share and mind share in this space. With over 3,000 companies in many different dynamic security sectors, it's incredibly fascinating always to look at what trends are shaping the landscape, especially after a year like 2020. So with that, we thought it would be fun to explore and discuss what is making this space and sector so interesting for venture capitalists, especially those who focus on high-tech cybersecurity startups. So what better way to do that than by welcoming our guests for today's episode. He joins us today as Managing Director of ForgePoint Capital, the premier venture capital investor for early and growth stage cybersecurity companies. He's renowned as a top-tier cybersecurity investor for over 25 years. He's invested in 25 cybersecurity startups during his career, leading 18 of them to exit. He is well respected by entrepreneurs, co-investors, board members, and go-to-market partners, and was cited as one of the top cybersecurity investors by market analyst firm CB Insights, where, by the way, he's listed as their board of directors of who's who in cybersecurity. Prior to ForgePoint, he was focused on cybersecurity investments with Intel Capital. He holds an MBA from Gonzaga University and is, of course, a huge Zag basketball fan. It's my pleasure to welcome my good friend, Sean Cunningham, to the Security on Cloud podcast. Welcome, Sean.
Thanks, John. Scott, appreciate the opportunity. I'm just wondering if, John, if you've got some spare time, if maybe you could use that intro to my family.
I can certainly do that. I'll just record this separately and send you a copy, Sean. and so they remind what you do every day of your life, right?
Yeah, we all love that. The parents are the dorks. So do they really? So go ahead.
Well, so Sean, let's start out with how did you actually become a venture capitalist? Focused on security. How did you do that?
Scott, I actually took a little different route than the classic VC. First and foremost, most venture capitalists are from a technical background, at a minimum education. My background is more sales and marketing. I worked for 15 odd years in corporations doing sales and marketing, and I joined Intel. And as part of doing a couple startups at Intel, we had a group that called the Green and funded a couple startups, sold those companies off. And then the venture capital group, Intel Capital, which is the largest venture capital group in the country, actually the world, said, hey, why don't you come on over? And I said, no, I want to do another startup. So I did another startup. Then I joined them in 2000. And at that time, there was no, quote, cybersecurity. It was enterprise security. And no one really wanted to look at that segment. And I was very fortunate. And one of the first deals that I was able to source was with a company that John knows well, Zone Labs. And they were 3 dogs and 2 cats in the back of Howard Street in the alley in San Francisco at the time. And they had some pretty interesting business models. They had the freemium model, and then they were going after the enterprise. And so I learned a lot just from that very first investment. And then we sold that to Checkpoint, and the rest is history from 2000. But that's how I ended up, kind of an enterprise. I did that for quite a number of years, and then did actually healthcare for a couple of years and realized that that's all about business models again. And so went back and did enterprise security, and then joined a spin out from Trident Capital, which is ForgePoint Capital in 2015. The three of us started that firm. We have since raised two funds, about $750 million under management, have invested in 25 companies and all cybersecurity investments. And we invest primarily in Series A, Series B companies, some growth companies.
Yeah, it's incredible. I mean, what a career, path to get to where you are today. And then you mentioned something there that I just want to touch on real quick, and that, when you were first kind of with Intel, others weren't particularly looking at this enterprise security or that space. Like you said, you were kind of fortunate enough to want to kind of move in that direction. When you look back from there to where we are today, I mean, can you summarize just how dramatically different it is today from the number of venture capitalist firms all focusing on enterprise security? I mean, it's pretty dramatically different, right? Would you say?
Well, when we were out, where it really hit home, John, was when we were out doing fundraising for our first fund. And it was pretty clear that the shiny object back in 2015 was cybersecurity. All the VC firms wanted to have some type of investment in cybersecurity. And the limited partners who invested in the funds was worried about saturation. And we made it pretty clear to them through our analysis that there wasn't going to be an issue with saturation. And the big difference now is as you'd mentioned, Richard, in previous episode, 3,000 startups. That's about 2,700 too many startups in cybersecurity. But there's a lot of consolidation, and the key is, as we've talked about, there is no silver bullet. And John, you've been doing this a long time. There are so many different angles to the hackers and their motivation to continue to either monetize these hacks or be able to, the state-sponsored hacks from a political perspective, or just as our former president said, the 400-pound person sitting on the bed for the sport of it. So there is no shortage of motivation to continue to create havoc in corporations as well as in the private sector. So the breaches are not going to be reduced. And so that's probably the biggest thing that's changed, is the motivations have escalated into quite an enterprise for the some of these countries, the unemployed technical talent that are not prosecuted for their bad behavior.
So let's actually fast forward to now, to 2020, and what, in your opinion, what spaces are particularly hot in the enterprise security space or cloud security space, and kind of what's getting your attention now?
It's pretty interesting if you look at the overall number of investments and where people are putting their dollars. When we put together our mapping for investments, we have non-goals and then goals. And some of the non-goals are a lot of the technology you've seen out there. And I don't want to say endpoint, but I'll say endpoint and a lot of legacy, network type activities. We are very heavily focused on, if you bump it up, not just segment, but we're interested in areas that really change the dynamics of a business. So we focus on a lot of technologies that, if you look at the old term shadow IT, a lot of companies now are decentralizing the security aspect and putting it out into the business units. These business units now need to build their own, not necessarily just IT infrastructure, but they need to solve their security solutions for their applications. So we're seeing a big increase in cloud security, obviously, as well as the automation of their technologies. So if you think about from, we look at security as a business. We look at security as a business enabler, and companies that are security, we want security as designed. One of the big trends right now is this DevSecOps. The reason why it's so important is developers are being forced by the security organizations to build security into their products. That's not what they do, and they don't do it well, nor should they do it well. And it's a distraction from what they need to do. So you're seeing vendors out there that are doing one of a couple things. One, helping them with the tools to provide them with that capability. But the other thing that I think is really interesting is if you can start at the beginning, tools to help these enterprise or these developers to write secure code. We invested in a company called Secure Code Warrior, actually does training gamification of these developers. And then the other thing is you end up making it so these developers don't have to put all these security puzzle pieces together. And the biggest advantage to all of that is if they can just take a stack of security automated software, put it into their application, and then let the company who's put those pieces together actually run that security aspect from a what we call an MDR perspective, managed detection and response, kind of a mini MSSP. That business unit never has to worry about the security on that application. And that's the beauty of being able to put all these pieces together in the cloud space.
Yeah, it's cool. And of course, full disclosure, right? Sean, you liked what you saw with Anitian, and you're an investor in Anitian, in full disclosure. And I think probably, I'm guessing for a lot of what you just outlined there, the fact that cloud is exploding, right? And certainly after a year like 2020, with the pandemic and, really a lot of companies embracing digital transformation, mostly because they absolutely had to. It was imperative to the business with everyone, working offline and remotely. And that idea of automating security in a cloud native way for something like DevSecOps and those DevOps teams, I imagine that was something that was pretty interesting to you with someone like Anitian and, as you said, others who are, driving forward the cloud security space. Is that accurate?
So, John, absolutely. And the other piece of that is, who's buying, where are the budget dollars? And as we saw, there were very large winners and quite a few losers during this pandemic. And anyone who could actually make that transformation quickly, particularly to the cloud, ended up seeing their valuation, either private or public, expand substantially. And so as we look at companies, we look at, who's actually going to benefit from these trends. One of the things that's unique is we typically have shied away from companies who are focused on the federal market. But interestingly, the federal market, and particularly with this administration, appears to be going to spend a lot of money on cybersecurity, kind of indirectly. So one of the things that we like is not companies that directly, are competing with other security tools or innovative solutions in the federal space, but companies that are enabling the ISVs who want to get those bids. So one of the things that's interesting is if you can enable a SaaS-based company with this solution, and it gets back to business units need to sell their products, but they can't sell in the Fed space without actually having some of the things Anitian does, is having the FedRAMP as well as other aspects of compliance. And we also invest in companies who are looking at the identity management space, which is also all plays into this same theme of you've got to have the solutions to be able to enable the business units, because in security, one of the things about security is very unusually, there's never an ROI for security. It's just overhead and a hassle. But if you can actually show there's an ROI to security and a time to market improvement, that is a huge win. You have security folks on board, and you have the DevOps people on board. So the PO gets purchased.
Yeah, and to follow up on that, I mean it's true. I mean, companies are pivoting, especially after a year like 2020. They need to move fast in many cases, and solutions that empower them to move fast through things like cloud security, application automation, right? And DevSecOps kind of things. I think, I was looking at, there's not a lot of statistics. There's more and more of them coming on the size of specifically the DevSecOps market. But one forecast shows that market growing to $5.9 billion market by 2023. Pretty big. And I think a lot of that is based on kind of what excites you about that space, enabling these teams who need to move fast. They're developing in the cloud. It's all about cloud applications and moving quickly, and how security technologies that can enable that and move as fast as they do are certainly hot right now, I would say, on the security landscape.
It's interesting if you look at it, John, from a public markets perspective. You look at the cloud providers and what their valuations have done, as well as on the public or on the private side, just skyrocketing. And it's pretty. If you do the comparison of even look back 10 years ago, and Intel, for instance, was all about moving data centers, doing the cloud, and had to do a hybrid because the biggest impediment to moving the cloud has always been security, which is a bit of a red herring, but that was actually what CISOs used. They want to put their crown jewels out in the cloud. But the statistics now even show that you're still less than 50% adoption of enterprise applications out into the cloud. So there's incredible amount of headroom. That's the reason why we believe that companies that need to move their applications to the cloud, and any element to be able to enable that, and whether it's through the DevSecOps aspect or whether through this identity, authorization aspect, to be able to really eliminate or minimize rather the chances for breach, is really where we're trying to invest and be proactive. And a lot of that comes down to even the technology. These, if you're not using cloud native technologies and using really this, as we look at, is really the new go-to-market aspects of really selling through strategic alliances, as opposed to the old enterprise model of having reps in every NFL city. So it all kind of plays together, and cloud actually is able to help make that transformation from a sales perspective as well as an implementation perspective.
So, Sean, you mentioned, in a couple of the answers that you had, that when you're investing in a security company, you're looking at a couple of attributes, some attributes that a company might have. Like you mentioned ROI, you mentioned time to market, is another attribute you might be looking for. I just heard cloud native technologies is a big one, or just cloud in general. Are there any other attributes of a company that you might be looking at that if you're interested in investing in them, that you might look for?
There's a lot of different opinions, Scott. I think it's really it's a tough question because every investor looks at a opportunity a little bit differently. Some are saying, "Hey, you know what? I want the next absolute disruptor in the industry that's going to just turn everything sideways." Well, those home runs don't happen very often, and innovation, quite honestly, is important. But at the end of the day, to me, now I take a little different approach. Being a non-technical guy, I look at everything from an investment from a business perspective, as opposed to the technology. Technology has to be there underlying, but at the end of the day, the POs are not getting cut because you have necessarily the most differentiated is important, but the best technology. It's about what's the best solution that integrates into your product, and how fast can you get to market. And a lot of VCs fall in love with companies because the technology is really cool, but to try to get that implemented and sold, the messaging gets very muddled and very difficult to be able to get the value proposition across. So I'm a big fan of absolutely using, staying away from legacy environments and moving to the next generation of technology. But at the same time, it doesn't have to have all the bells and whistles. It has to have that roadmap. And so as we look at deals, it's a difference. We'll talk a minute probably about how we look at deals, but whether it's a C deal or Series A, B, or C. So it makes a big difference from an attribute perspective, Scott.
Actually, that's a great answer, because and I would be interested in saying, kind of what do you, drilling down to kind of that next level of, what are you looking at for, A versus B versus C? Are there different things that you look at, in that process?
Scott, it's clearly one of those things where everyone likes to talk about the team, the traction, and the next $1 billion deal, right? So, I don't want to say, team is number one and so on, but, you have to have the fundamentals of a team. But I think, one of the things that is unique is, to me, the way I look at it is, if that team actually has a characteristic called self-awareness and understands where the gaps are in their team and are willing to, founders is difficult to step aside and say, hey, I'm really better at a certain thing and maybe I'm not in that position today, so let's find the right person. And that's one of the things I'm looking for, is a team that really understands what success would look like for the company, as opposed to, hey, here's the numbers, we can hit it and let's just go. Being able to want to augment that team with the right bodies. And since we don't do C deals, really need to have the technology, quote, complete, as in they need to show traction. We need to be able to see that, not that they've made, they have $1 million or they have $5 million or whatever the ARR needs to be. It's really more about, have they validated this technology actually works in an environment and actually the customer cares and it really does help improve their business processes or sales out even better. So that's kind of how we look at deals, a little bit different than a lot of venture capital firms. And one of the things, most of us are operators and investors. So we do roll up our sleeves and we do help companies understand these attributes, and we partner with them. And, I don't want to say that, hey, we come in and we'll work with you. We have to replace or put entrepreneurs in different roles, but we don't come in like a private equity firm and, do wholesale changes. But on the other hand, it's pattern recognition, right? That's one of the things that VCs do well. They see these things. And after, 25 deals, I've seen most of these plays, and it's a matter of helping these companies recognize what is success and how to get there.
Yeah, and I think it's one of the things it's interesting. It's just to dive into this, and for our listeners, I'm sure it's interesting because a lot of we don't get a chance. A lot of certainly our listeners and others don't really get a chance to hear from your perspective, Sean. But one of the things you said, I think it kind of overlooks one of the roles that I think you and others play, is you help the company build. Is that? I mean, in other words, it sounds like if it's your preference, you would prefer to get into the company earlier, right? As you would, but you do help the company build, from the team to their approach to the strategy. I mean, there is that element there. Can you talk a little bit about how that plays? Because sometimes that's, people just think in terms of you're financing it and perhaps you're sitting on the board, but as you said, you roll up your sleeves, you're helping the team build, you're helping the team structure, potentially even rebuild a team in many cases. Can you dive a little bit into that for our listeners?
So, John, one of the things I encourage entrepreneurs when I have discussions with them is VCs are doing a lot of diligence during the process, but before I would write a term sheet, I give them open book to every deal I've done and contacts, if they want them, to go and do a reference on me, because we're going to be, quote, living together for the next, pick it, 2 years, 5 years, longer.
Mm-hmm.
And if you can't feel comfortable working with this entrepreneur or this VC, it's not going to work. Because when you sit down and talk about the organization, and just had this conversation, last week, just invested in a company recently, and there's an arm wrestle about, okay, so is this the right person for the sales leadership? How do we augment that? Okay, so does this person have, what kind of legs do they have, for the future? And, if we bring somebody in, what type of individual do we need now, and what do we need in the future? So, and, be it marketing messaging, there's a company, in the portfolio, been spending a lot of time, brought in some outside consultants to help them work on messaging. We've been meeting, once a week. And, I don't have the answers, but at least I can help kind of guide as a very interested third party. But we don't come in and say we have the answers. We're just trying to put out a playbook to kind of walk through for them. And it doesn't typically end up around the technology side, which is a bit of a misnomer that most people think that, VCs are going to come in, change the technology. It's really about, product market fit at the end of the day and go to market and having the right bodies in place to pull that off.
Yeah.
So,
go ahead, Scott.
Go ahead, John.
No, you go ahead.
So I had a question when you were talking, you were talking about all the, all the things that all the companies that you were looking at. If there is a, if there's a company that's actually interested in getting funding, from a VC, from your perspective, do you have some tips for, like, say, security companies or cybersecurity companies, cloud companies, that they should know when they're going to, let's say, approach you and maybe ask for some of that funding?
One of the things, Scott, that feels a little it's difficult for people to actually get their arms around, and it's a bit annoying, and that is most VCs don't take cold calls. So if you're not networked or you're not introduced through a trusted person in that VC's network, you're going to be difficult to get their attention, because we see a lot of business plans, as you could imagine. So that's one of the biggest things, is make sure you use your network and come in properly referenced. And it's like anything else, right? And to me, everything's about sales 101 at the end of the day. That first meeting, that first discussion, make sure you focus on what's important. And it's not about spending, the hour that you have deep diving into the nuts and bolts of the technology. It's doing a broad overview of where the business is, what problem are you solving? And that's the biggest key I find, that entrepreneurs come in and they can talk about the segment, they can talk about, the technology, but what's the problem they're solving for the end customer? Why are they going to pull out their checkbook? Who cares? Mm-hmm. What's the so what? And I'm a pretty simple guy, and that's, at the end of the day, what I really care about is, how are they going to be successful? What's the differentiation? You can talk about the competition and so on, but it's really, how are you going to make the buyer successful in their job? How are they going to improve their businesses by buying your product?
That's really good advice, right? I mean, just even so, listeners, for those of you building a startup, you heard it here, that leverage your network. VCs don't really take cold calls. You leverage that and find a way to use that as a reference, right, Sean, to be introduced. I think that's a key piece of advice.
It's a cold, hard fact that, on the surface is pretty obnoxious, but in reality, that's just the way it works.
It's the way it works. And again, we talked about how many companies there are. There's so many. How can you keep track of that? So good advice. So how about this one? What should they not do, Sean? So we heard about what they should do. Really good advice. You heard this, but what should they not do? And I don't know. Tell us an example. If you have one about someone who, you've been pitched probably so many times you forget to count now. There must be one where it stands out as, please don't do this. If you do get that precious hour, what should they not do, Sean?
So without going to school on any company, obviously, I think some of the things, John, that are really important that you have alluded to is companies, when they've made the decision to go down the path and take money from the venture capitalists, a lot of them end up saying, "Hey, I'm going to do a day trip down to Silicon Valley, and I'm going to go hit, the proverbial Sand Hill Road trip." Mm-hmm. And so I've set up 5 appointments in one day. Well, you know what? That is a disastrous model because you can imagine, the things that happen. Some of the things that happen is, something as simple as the pitch deck. Gee, it happens to have the wrong VC name on the cover. Have seen that movie. They're late for a movie, or they're late for the meeting because logistically you can't get up and down to the different places. People coming into the valley, they hear about the traffic, but until you get to experience it, it's a problem. And some of the other ones, you're having a meeting or you're starting the meeting, everybody, "Hey, how are you?" Da, da, da. They open their notebook to hand out the business cards, and lo and behold, the 3 previous firms' cards fall on the table. "Oh, really? You were, talking to these guys." That's probably not endearing. And the issue with that, not only that, is then we have a feel for, who they're looking at. And it's not even competition. And one of the misnomers too is that we don't actually talk to other people doing deals in this space. We do collaborate. Sometimes we syndicate deals. Sometimes you want to get a feel without mentioning names. So it's okay. We know that they're not just exclusively talking to us. And the most important thing, I think, John, is the passion for their product, for their company is lost. It turns into a canned pitch when they've given it 3 times already that day. So my key advice here is don't try to cram too many into one day unless you really don't care about, you just want to kind of do a flyby at some of these folks because maybe they want to meet them, but they're not going to be able to put their best foot forward.
Yeah, it's really quality, right? And it's great. And I agree. I mean, having done this and Sean, we go back to companies like Solera Networks where you were on the board there. That's a company I was also leading marketing, and the passion is critical. It really is. It's really, really good advice. So everybody, you heard it here. And it's always fascinating. We knew this would be an interesting discussion. I know we could talk for a lot longer. We'll have to perhaps have you back again, Sean, as we get even further into 2021. And, it's such a dynamic space. Things are changing all the time, but fantastic discussion, Sean. Thanks so much for joining us today. And again, if any of our listeners want to learn more about you or hear about you, where is the best place for them to go, Sean?
John and Scott, I'll just say thanks for the opportunity, and happy to come back at any time that'd be appropriate and speak more about specific portfolio companies and or technologies. So reaching me at ForgePointCap.com is probably the best way. You can get my email out there rather than giving it to you a long email right now.
This was so great, Sean. Thank you for joining us. And folks, remember, the Security on Cloud podcast is brought to you by Anitian, the leading cloud application security and compliance automation provider, delivering the fastest path to security and compliance in the cloud.
Thanks again to our guest, Sean Cunningham. Until we meet again, I'm John Vecchi.
And I'm Scott Emo.
See you next time on Anitian Radio.
Thanks for listening to this episode of the Security on Cloud podcast. If you like the show, be sure to subscribe so that you can join us again for another episode. And for tips, show notes, and more episodes, check us out at Anitian.com. See you next time.